This video is sponsored by PelucidFX.com. Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. So let's try to take a look again on the gold market. Gold market now stands in some sort of the bounce after the significant plunge within the current and previous week as well. So here, guys, still exists some possibility for the deeper retracement. If you will read our analysis for the of the weekly time frame and the monthly time frame, we know that market stands on the monthly oversold and that significant support on the weekly time frame. Why I think and why I speak about this potential deeper retracement, because I think that situation is a bit more delicate than it seems on the first view. Because when market stands at the significant oversold on the monthly time frame, it's very rare and it's very hard to believe that it will just pass without no effect on lower time frames. That market will just stand for some time around this oversold level and just will continue move to the downside. Very often that leads to the deeper retracements, especially because market at 1618 extension on the weekly time frame, this is rather significant target. And that's why I still think that the situation with upward deeper retracement is not over yet. So the last word of this retracement hasn't been said yet by the market. But unfortunately, currently, as on the intraday charts, as on the daily time frame, we do not see and do not have any patterns that could tell us, yes, that retracement will start. Here we see some exhausting or reversal patterns that points on this potential pullback or something of that sort. In fact, unfortunately, we have nothing such strong patterns. But what we have, first of all, you could see this price action to the downside. You see that this candle's rather strong to the downside, but price action, but trend stands bullish, and that is some kind of the bearish dynamic pressure when the trend holds bullish, but price action absolutely disrespect that and doesn't support that by the direction of the development. That direction is downside. That is the warning sign for the potential retracement. Definitely speaking, is not the warning sign for retracement in general, but for the moment that it probably could start from that area. So if market will hold this low, that could be some sort of the ABCD pattern to the upside. That points precisely on the confluence resistance and the retesting of the previous low, as you can see, and that is the target of the weekly harmonic swing. If you'll take a look at the weekly time frame, you'll see that market moves with the harmonic swings as to the downside as on the retracements. And on the weekly time frame, this upward harmonic swing hasn't been reached yet, the target of the swing. It stands still slightly higher than that high on the daily time frame. That's why it also could be the retracement to the upside. Another reason for that is this new monthly pivot point. The monthly pivot point hasn't been tested yet by the market. That also could suggest some deeper move to the upside. Well, from that perspective, the current low is significant. But if even market will take out this low, this will not mean that upward deeper retracement will not happen. Because take a look. Right below this low stands the weekly pivot support 1. And gold market is the market that likes to show the washing rinses and then clear out the significant extreme points before reversal or retracement. Most of all, that is very cunning market. And the second scenario that could happen, and by which the retracement could happen, is potential double bottom pattern on the daily time frame. So market could show the second bottom, clear out these lows, taking out the stops, grab the stops that's placed now below it, test the weekly pivot support 1 and turn to the upside. That is also possible. So our major task is to understand how we could deal with these scenarios and what our trading plan will be, how we will react and behave depending on the price action that market will offer us Monday on the beginning of the next week. So let's shift to the hourly time frame. On the hourly time frame, the situation looks even more complex, because take a look at this one, A, B, C bottom. You see that market hasn't quite reached the 1618 extension of that ABCD pattern. The 100% extension was right here. So market has tested the 127, but hasn't quite reached the 1618. And take a look what has happened. Market has shown the swing to the upside greater than the previous swing to the downside. That is usually happens when market reverses. And on the 4-hour time frame, it looks like the bullish engulfing pattern. So market has, by this swing up, market has broken the tendency, lower lows, okay, lower highs. So market has shown the higher high, and now is turning to this deeper retracement. So that probably you could look like some ugly head and shoulders patterns probably could happen. So how we could deal with this? So since market has the uncompleted target, so this is the risk that market still could show another leg down and then turn to the upside. Or from the another point of view, we see that market has shown this nice recovery on Friday, and that could be the head and shoulders pattern. How is better to deal with it? Well, my thought about it is, I just offer you the safer way, as I think it could be we could deal with this situation. First of all, my thought is better to take the long position only when the market will take out of this high. We should take a look at the potential profit. So if we will look at this swing, that potential AB leg of the ABCD pattern, and count it to the upside, we will see that taking the position right here or right here, it's not the big difference in terms of this potential move. We will get a bit more, a bit less profit, but if it will be ABCD pattern to the upside, but that will be just much safer to enter if market will start move to the upside. This will trigger the bullish engulfing pattern. This will trigger this bit goofy looking head and shoulders pattern, and that will confirm the potential intention of the market for the upward move. So if market will take it out of these highs, it's just safer to enter on some shallow retracement, because it will give you the much tighter stop, because you will be able to place stop right below this swing high, because if market will return right back in the body of this potential reverse head and shoulders pattern, that will be not the bullish development. That will be not in a row with this upward development with this ABCD pattern. But if you will try to enter long here, you will be right only if this really the head and shoulders pattern. But if market will have tendency to reach the 1618 first, or even grab the stops below this low, your risk will be very significant, and that will be a nervous situation where you hold the long position and looking how market move against you. Again, that also we said that probably could be retracement, but if market will fail around these lows and will continue move down, then probably we could forget about this retracement in this development. So you can see that taking position without any confirmation from the price action will be a rather risky idea. So that's why I prefer to enter long either if I will see the breakout above this level and see some thrusting development to the upside, because it will protect me from potential move to this area. So if market, for instance, will take this target first and then returns right back, that will be much safer to enter long here. That is the first potential scenario. Or the second scenario, if market will fail there, continue move lower, then the next stage of our trading plan is watching for behavior around these lows. We would like to see the wash and rinse, grabbing the steps on the market will taking out these lows and will show the fast return right back. some sort of the bullish engulfing pattern, railroad track or something that could be formed in this area will be much preferable. If it will be the Russian rings, that could turn to the double bottom pattern on the daily time frame. That will be also excellent scenario, and we will have the pattern on our back that will let us to enter right at the bottom of the second low of the double bottom pattern. That will be just perfect. In this case, we will count even on the greater move to the upside, because the target of the double bottom pattern is the distance between the lows and the neckline counted to the upside in the direction of breakout. And if it will be the double bottom, we will count at minimum moving to the neckline's 1620 area. So that's also will be very nice move. So you can see situation on the gold market is always a bit sophisticated, because there are some contradictory moments exist currently, and in such environments, such circumstances, we need just patience. We need patience to wait when the market by itself will show us what it intends to do. That's why, from that perspective, as I said, wait either break out through these highs and thrusting move to the upside, then take the first retracement with the long position, or if market will fail there and there, wait for the behavior on previous low. We need to see some sort of the Russian rings around this area to pretend on the double bottom pattern and to justify to get the confidence from the market with our long position. Otherwise, if market will fail there and will show some just the real breakout to the downside, do not enter long. That probably could lead to the continuation move to the 1530 target on the daily time frame, on the weekly time frame.